retirement. My friends, if you plan on living in those golden years, the last 10, 15, 20, 30 years of your life, this is a do not miss. These are things that you want to start taking action on immediately. And I'm going to show you also 5 different techniques on how you can start implementing these new strategies today in your retirement. Bob Land, what's going on, brother? Jeremiah, what's going on? Thanks for joining. I am doing fabulous. Guillermo, I am doing fabulous, brother. Thanks for asking. But my friends, I'm going to give it about 30 more seconds, then we're going to get started. Make sure you get a pen and make sure you have some paper out. This is a do not miss. It is live, so you can go back and watch a replay. If you do miss something, you can go back and catch it. Many of you, I don't want to take up too much of your time. You know I talk pretty fast, but this is a do not miss. Go ahead and please click like if you're just logging on. Friends, there's 316 million people living in the United States right now. How many of those people have a 9-to-5 job? How many of those people plan on retiring one day and hopefully being able to live and take those vacations and everything? Brian, thanks for joining, brother. How many people plan on traveling? If you plan on traveling the world in your golden years, go ahead and click I below. I plan on retiring not at 65, not at 67, not at 63. I plan on retiring. I'm 35 now. I plan on retiring in probably about 45. Okay. But what I'm doing right now is I am creating the life that I never have to retire from, that I never have to take a vacation from. And, but that's not what this episode is about. That's a totally different episode. Give it about 20 more seconds and then we will get started, my friends. And if at any point in this video you have any questions or comments, go ahead and put them in the comment section. I will address them as I see them. But my friends, the first thing I want to point out is the 5 things that people don't know what's wrong with their retirement accounts. The number 1 issue, my friends. All right, make sure you got a pen and paper and just write these down. Go and do your research. The first issue with your current qualified retirement plan is inflation. How many people know what inflation is? Inflation right now, just a rough estimate over the past 20 years in the United States, it's been running right about 2.8 to 3%. And over the past 10 years, it's been roughly about 3%. So right now, think about 10 years from now. And if let's say we're at 3% per year inflation over a 10-year time period, that's 30% loss on the value of your money. After 20 years, that's roughly about a 60% loss, my friends. That's just a rough estimate. So think about those people that retired 20 years ago. Those people that retired 20 years ago, my friends, the money that they had in their retirement account on the day that they retired is worth about 60% less now with buying power than it was then on the day that they retired. So we have to kind of figure out this is what's happening right now. Is what tends to happen here is that it starts to become a race. And if you're a financial advisor, if you're a financial planner, financial coach, go ahead and fact check, because I'm sure you're giving the same information out if you're running actual data, factual numbers. See, my friends, numbers never lie. And this is why I get on here and I break down the numbers to you so you can go and verify for yourself and do your own due diligence, not just take my word for it. But I just want to spark that interest to actually get you to go and research and be like, whoa, this is what I got myself into, and I don't know how to do it. So this right here is what tends to happen, my friends. It becomes a race for you between you dying and you running out of money. It's like, which is going to happen first? Am I going to die? Am I going to run out of money? The only way that you will not run out of money by putting your money into a qualified plan is if your money is able to generate enough appreciation, meaning that you will have to have enough that your stocks and your mutual funds and stuff is going to have to rise enough to cover the cost of inflation. And then, of course, the taxes. And then how many years are you going to have to actually pull money out? How much money do you need to live a comfortable life without lowering the quality of your life, my friends? Okay. The crew of Texas Art Diva says, hi. Awesome. How's everybody doing? Brian, thanks for that, brother. All right, so the second part, does anybody have any questions on the first part? Inflation. Inflation is a problem, okay? Our government keeps printing money off, where it's lowering our the cost of us spending. The number two, it's not multi-generational. How many of you know what I mean by that? It's not multi-generational. I'm going to go ahead and tell you a strong belief of mine is that the quality of your life, my friends, will be greatly determined by the quality of the questions that you ask yourself. Let me repeat that for you. The quality of your life, my friends, is going to be greatly determined by the quality of questions that you ask yourself. My friends, a good question to ask yourself is, how can I get enough money in retirement that will increase with inflation and the cost of living? Because it all rises, okay? But I also, how can I get that and also still leave a paycheck for the rest of the life to my heirs? Let me ask that question again for you. How can I get enough money in my retirement account that will increase with inflation and with the cost of living and also leave a paycheck for life to my heirs once I pass? See, the question we ask ourselves, we're always going to find an answer to it. So you ask yourself, how can I do this? How can I do that? You're always going to go out there and you're going to find a solution to your problem. So this is why you have to make sure you're asking yourself the right questions. Think about this, my friends. See, my friends, a 401k or an IRA is not going to answer that question for you. It's not. It's simply not. There's no data out there that, I mean, go ask people who are currently retired, who are what's the word I'm looking for? It's on the tip of my tongue. They're relying on what? They're still relying on government assistance. They're retiring. They need that Social Security check. Now, remember, you only get Social Security if you're living below the means. My friends, that's not what golden years are meant for. And by the time we retire 20, 30, 40 years from now, Social Security, it may not be here. Hopefully they fix the system. But see, there's a few other vehicles that are simply amazing and that are also available for your use, where you can grow your money exponentially. You're not going to have to worry about any loss. It's liquid. You also won't be have to miss out on any opportunities that may come your way. And yes, you can pass on to your heirs once you pass. It solves the problem, the inflationary problem, my friends. Number three, bad partnerships. How many of you know what I mean by that? Bad partnerships. All right, check this out. So let's say many of us, we were taught to put our money into a bank, correct? I have money in a bank, you have money in a bank. So let's say you open up a checking account at your local bank and you create a partnership with that bank because you're giving them money and they're holding it safe for you. Okay. Excuse me. It's like a mini marriage. In this partnership, think about this. The number one thing that you want to do is what? Accumulate assets that generate cash flow on a regular basis. My friends, stocks and mutual funds very rarely do that. When you put your money in stocks and mutual funds, you're pretty much just hoping that they go up in value. There's no, you don't know if it's going to go up in value or not. There's just no way to tell. It's an emotional roller coaster. All right. You invest all of your hard-earned money into your partner, whomever the company may be. They invest no money. You take all the risk, but they make money no matter what because they charge you fees on the money that you put into their management. Whether the market goes up or whether the market goes down, they charge you fees. Even the bank sitting in your savings account, sitting in your checking account, they charge you monthly fees. All right. My friends, think about it this way. I was taught to always accumulate assets that produce cash flow. This is exactly what your partner is actually doing with your money. When you place your money into their management, it is an asset for them that produces cash flow for them, not you, my friends. Please understand this. You're not going to touch this money until you retire. And then you're only going to get cash flow if it makes enough money. Then we have to calculate inflation. And there's so many other problems with that. I just want to touch on the top 5. But they get their money no matter what. So imagine this. Sean, if you're still watching, imagine Sean say, I come to you. I say, let's be partners, Sean. You and I, you're going to invest all the money. I'm not going to invest anything. However, I'm going to charge you a fee. So I get paid no matter what. and you take all the risk. Now, Sean, does that sound like a good partnership to you? You take all the risk, you put all the money up, and I just charge a fee and I profit. Does that sound like a good partnership to you? It surely doesn't to me, my friends. Okay? You may like that, but I'm not. Number 4, higher taxes. Oh, you're going to love this one. Higher taxes. We all love the tax, right? My friends, you're going to be paying taxes on the harvest, not the seed. Now, if you're in business, if you're a business owner in real estate and stuff, and you have that cash flow, you're going to have a lot of deductions that you can tax, or that you can write off on your taxes. However, the average person, the average middle class, they're not into real estate. They're not business owners. So I'm talking to you right now. The issue with these qualified plans, my friends, are the taxes. Now, let me ask you a simple question. Do you feel the taxes are going to go up, go down, or stay the same 30 years from now? See, no one knows this, but if we look back at history, you know what's funny is last month I was actually reading an article where Jefferson and Adams, they were actually going to have to raise taxes to 6%. And they came forward and they said they thought their lives were going to be in jeopardy because they had to raise the taxes to 6%. And now we're looking at what, 35, 40%. It's crazy. It's crazy when you think about how taxes have risen over the past 100 years. It's crazy. But my friends, there's four phases to a retirement planning. And this seems a little insidious and ambiguous. It seems that this was actually intentionally structured by the government to confuse us and to ultimately cost us in the end. What do you think the government just did for themselves when they created the qualified plans in the mid-70s? What do you think they did? They've increased their cost outcome, right? They have also created an annuity for themselves, my friends. Think about this. Write this stuff down. That way you can go and fact check and verify. Make sure my data is accurate. All right. They've created an annuity for themselves. They went and said, you know what? You're right. You're right. You're arguing about taxes. You are absolutely right. Here's a product. Here's a service where you don't have to pay taxes on this little bit that you're going to be saving. My friends, they want a bigger chunk, a bigger amount. And the government said, we're patient. We can wait 30, 40 years. You get what you want, they get what they want. All right. I know people want to think that the government's on their side, my friends, but the government does things for the benefit of the government. Think about this. The government does things for the benefit of the government. If the government has done something for you, the chances are they are going to be the biggest benefactor down the road. I just, please think about that. Open your eyes, open your ears, and just be receptive of the information that I'm giving you, and then go and formulate your own opinion and thoughts and make some decisions, okay? What if I told you there's a growth vehicle where you can actually withdraw your money anytime you wanted for anything you wanted, tax-free? Is that something that you would be interested in? If that's something you would be interested in, go ahead and put yes in the comments. That way I can get with you and tell you more about this growth vehicle, my friends. Number 5, and the last thing is loss of control. I'm a control freak. I love to control everything. I love to control where my money is. I love to control. I love driving. I do not like being passenger in a car because I'm not in control of the vehicle. All right. That's how control. I want to know the outcome. And it's just, I'm a control freak. I don't know if you are or not, but when it comes to your finances, make sure you're a control freak. See, loss of control, my friends. Some people feel like if they just get a job or let someone else handle their retirement, then it's going to be a safer bet. How many of you currently have a 401k plan, have a TRS, have a thrift savings plan, have a 403b, have a mutual fund, an IRA? How many of you do that? And you said, you know what? I'm going to let the experts control my money, my hard-earned money, because they know what they're doing, and I feel it's in safer hands than my own. How many of you currently have that, my friends? You know, in the last financial downturn, there were financial businesses that actually went under, bottoms up. They didn't even get the bailout. There's been over 35 recessions since the Great Depression. There's been 17 significant recessions where the market dropped by over 25%. All right. If we look at the 3 largest was 1929, 2000, and then 2008. 2008, the market dropped by 58%. So people who had their money in these qualified plans, these 401ks, these 403bs, these IRAs, the mutual funds, they lost 58% of their account. Most of them lost around 45 to 58% of their retirement. I have an aunt right now who is 2 years away from retirement. She was supposed to retire in 2010. She lost a couple $100,000 in her retirement. She is still working till this day trying to earn that money back. My friends, it just smacked people upside the head because guess what? Nobody expected it. Nobody expected it. 2000, the market, and during the dot-com crash, the market dropped by 52%, my friends. In 1929, and dropped by over 90%. Now, I don't know about you, but I suspect there's going to be another market crash here relatively soon, within the next 18 to 24 months. Remember, what goes up must come down. All right, that's what goes up must come down. I truly believe in that. And but anyway, that's an entirely different video. I think I've done a video on it before. But I've always found that exponentially greater growth or safety by being in control. I love being in control. I can't tell you enough that if you're not proactive each and every month, my friends, you're missing out on so many opportunities. See, in a qualified plan where your money is held captive for 20, 30, 40 years, my friends, you are missing out on opportunities. There's an opportunity cost there, an opportunity loss. What if a business opportunity comes your way, a great real estate property opens up? Guess what? Your money's tied to these qualified plans. You have no liquidity with that. You can't access that. And if you do, you're heavily penalized and taxed. Now, 40% right off the top, that's not even a good deal. So my friends, rethink on where you're placing your money. How much do you know about your qualified plan? Or did you just sign the paperwork when you got started with a new job? So my friends, it's time to start thinking a little more creatively. Once again, what if a product existed where you had full control of your money, my friends, full liquidity, guarantees of no loss and exponential growth of your money, and it would be tax-free? Is that something that you would be interested in learning more about? If so, once again, type yes in the comments, my friends. Guys, I care about you. I care about people in general. We were all born to win. We were all born to succeed in life. My friends, start challenging the status quo. Go out there and do your own research before you sign any document and put your hard-earned money into these qualified plans, once again, controlled by the government, not by you. Go out there and fact check and make sure that it's a good vehicle for your money to be placed in, my friends. How many people have faith in other people? Sean, that's right. That's right. Yeah, Boblin, we need to talk, brother. But anybody, if you're watching this, my friends, I encourage you to do your research. Find out where your money is. Think about that. It's your money. Can you afford to lose your money? Remember, Robert Kiyosaki, you see I got the cash flow board game above me. I love his methodologies and his philosophies about things on how money works and how money grows and investment strategies and everything. But Robert Kiyosaki says, I stay away from the stock market because our money is supposed to accumulate. We're not trying to lose our money. We're trying to grow our money. See, financial advisors, and I know there's some financial advisors on here, but financial advisors' job is cash accumulation. See, my job is cash preservation, okay? I'm trying to protect your money. Oh, by the way, I have a product that's also going to grow your money exponentially while it's protecting it at the same time. Financial advisor can't protect your money. They can only hope that your money grows, but yet whether it grows or whether it loses, they're still going to be profiting, my friends. So it's very vital and very critical that you understand who your money or where your money is, what product and service, how does it work? You need to know the ins and outs. Warren Buffett says, never put your money into something you do not fully understand, my friends. The ball's in your court now. You have some decisions to make. This is life-changing decisions that I just handed over to you. Hopefully, I've provided enough value to you that will actually pique your interest to go and get on Google and start learning these things. Or that will pique your interest that I've provided enough value that we can open up a conversation on how we can assist you, on how you can learn and become educated on how your money works and different vehicles that can give you exponential growth along with the safety of your money, my friends. So, my friends, does anybody have any questions about anything we talked about? 5 things that are wrong with your retirement plan. I'm telling you, if you practice and you go and do those and research the 5 things that I just pointed out, okay, you're going to be able to start making changes today. Actually, when you wake up tomorrow, okay, you can start making those changes immediately, and it's going to impact your life for generations to come, my friends. Think about this. If you could actually save not only for yourself, but for your family, for your kids, for your grandkids, for your great grandkids. Once you're passed, you've still left a legacy behind. Imagine what that would do for your family, for your name. Just throwing that out there. But my friends, if you found any value, please click like, please click share, and leave me a comment, my friends. Danny, what's going on? Thanks for joining. Nicole, thanks for joining. Awesome. Anybody have any questions? Going once, going twice. All right, my friends, y'all have a wonderful and blessed night. May God richly bless you in all that you do. Go out there. Remember, tomorrow is a new day. It's a new day to be the very best you that you could possibly be. So go ahead and prepare tonight. Write down your goals tomorrow and go out there tomorrow. Wake up, ready to go, and crush your goals, my friends. Till the next video, have a good night.